I wanted to explain the flood insurance program component to you.
Okay.
If we do $200,000 worth of coverage on your home, I highly recommend you do the same thing on flood insurance. So it starts at $200,000, you get automatic $80,000 in contents coverage, and that premium is $361 a year with a $1,000 deductible. Now, I always take this and plug it up there right away, because you're going to be in the background thinking, okay, flood insurance, but what does it cost? And you're not going to hear my next slide. So I want to let you know right away what the premium is and what the cost is for flood insurance right up front. Now, reasons to have a larger deductible on your homeowner's policy: a small loss could cause your homeowner's insurance company to non-renew your policy, leaving you with the state pool market at higher rates. So yeah, that's what policies are for, to have claims, but we also look at people that have claims, and maybe a claim could force you into a higher homeowner's premium. So why collect a $250 claim and your insurance might go up $100 a year? So that wouldn't be a good thing. A small loss will remove any loss-free credits you have credited on your policy that have taken years to earn as well. So you could be getting $100 or more on loss-free credits on your homeowner's program that's taken you 8 years to accumulate under your apartment program. Now you're going to lose that in a heartbeat over a small claim. The loss could follow you for additional or newly purchased properties, causing increases in those premiums as well. So now you don't want this home anymore. 3 years later, you go to a new home, and they're looking at your losses from your prior property that could affect you on your new purchase. It frees up cash to allow you to purchase more catastrophic coverage game plan on your assets. Most everyone can afford $2,500 if something happened. Maybe through an equity line, maybe you have to take cash out of the bank, maybe you have to borrow from someone, but you can't afford to lose the $200,000 home. Your house burns to the ground, the homeowner's insurance program pays the claim. A massive flooding occurs and your house gets wiped out, that's where the flood insurance program comes in. So what we're looking at here is we're looking at insuring your home on a catastrophic basis, not on a small claim basis. Reasons to purchase flood insurance: 25% of all flood losses happen in preferred zones. Now, you happen to be in a cheaper zone, so your insurance costs aren't as much as somebody, let's say, that's living right on the ocean. So right now it's cheap, and it's a good time to buy it while it is cheap. But losses do happen in these preferred zones, and about 25% of a year do happen there. Flooding can come from overflow of lakes, rivers, streams, oceans, or water source, such as a neighbor's swimming pool, city or town water tower, or even an overturned pumper truck. Now, on the way to your home, I happened to notice one of the city's static storage units for their fire department, right up the hill from your house, uphill. So if that broke, where does water go? Downhill, and it could wipe your house out. And that would be a covered claim under the flood insurance program, because it would be an additional water source. Buying flood insurance now may lock your property into the preferred rating structure, even if the zone changes that would be good for you or even a purchaser of your home. What does that mean? To make it simple, and the way it was explained to me a couple years ago by one of the folks from the Federal Emergency Management Agency, FEMA, let's say your premium's $300 now, to make the numbers easier for you to understand. The premium's $300 now. Couple years from now, when they get over the 2-year window that they're doing for allowing you to keep your rate, let's say your zone changes, and the bank now says, "Oh, Melissa, you have to buy flood insurance." Well, you already had, because you bought it now. But when it changes to the standard zone, your premium won't be $300 anymore. It'll move up to $800. But if you don't buy the flood insurance prior to the break-in period, then your insurance is going to go to $2,800. So it keeps your insurance at the preferred zone, but rated under the standard rates. So it's $300 now. It'll move to $800 because the zone changes, but it's better than $2,800. That's why we want to buy flood insurance before something happens. The purchaser of your home, what does that mean? You sell your home 3 years from now. The purchaser gets your preferred rate. the grandfathering clause under the flood program on that rate can be assigned to the new purchaser. So if they're looking at your home and they're looking at somebody else's home, the other home has a $2,800 flood policy, yours has an $8,000, $2,000 cheaper a year on insurance. Which home do you think they might be interested in, yours or the other one? Especially if everything else seems equal, they're probably going to look at your home over the other home. So that's why we'd want to consider buying flood insurance to lock in the grandfathering clause. And you may be like everybody else, well, the government's going to help me. The last line here, the federal government doesn't really help much. Where there's a disaster, about 50% of the time, the president declares a declaration of disaster. When they declare a declaration, Congress may declare funding. What is funding? Funding is a housing and urban development, a HUD loan. It's a low-interest loan in order to rebuild your home. Well, gee, what if you or your spouse got laid off and you can't afford another loan? Well, then you can't take out the HUD loan. You might not even qualify for it. You still have to qualify for the loan. If you've had a couple of glitches on your credit rating, you're not going to qualify for the loan. You buy the flood insurance, now you've got the coverage should something happen.